As we get into the market today, we need to start establishing what was really moving us and are we getting the follow through volume? We talked about possibly getting that breakout on the day, and it's looking like we're hitting all those key targets that we mentioned yesterday. We're gonna talk about exactly what to expect going into next week and can this run continue? Before we get into that, I have to ask you to consider doing two things: liking and subscribing. Every single day I am posting these videos for you, so you are ready for the market and you know what to expect. As well as that, we do have the Discord. The link is down below. We're going over everything all day long. A group of traders are still in there talking about the market. Every single morning we are live calling out and looking at potential plays. Now, as we jump back in here, I want to start talking about what's happening here on NQ, because in this monstrous run up, we had some really good stuff happening. But if you do not know, futures did roll over today. And if you don't know what that means, let me just explain a little bit to you. So basically, there's 4 quarters going into futures and for the market. And you basically have your big funds piling money into these, your Nasdaq and your ES. These are your big futures. We chart every single day. Well, something interesting happened last night, and I didn't even really notice, or I would have talked about in the video, but look at that gap that you have here, basically from market close until like basically when the day starts for the new trading day, which is around, I believe, 5 p.m. is when the markets reopen again. From between 4 and 5 p.m. they do close. Anyways, right there, boom, you saw a gap up, and you never see this. Since I was like looking, I was like, well, what is going on here? And what happened was futures rolled over. So you had your ticker basically roll over into these. And so when you look at this chart, you seem like you hit that key level, but I want to show you what I'm looking at. NQU. This is really what the market looks like. And if you're looking at your broker like Thinkorswim, then it's going to show these numbers right here and not this delayed information that you may be getting from some of your other brokers or even TradingView. So TradingView, if you come in here, this is your real numbers here. You're still operating below that key level of 12.65. You did get a push up to 12.620-ish, but you didn't quite make it there. On ES, you can see the same thing happening here, right there. You see that gap there, so we have to go back to reality, ESU, come back in here, boom, no gap, that's how we know. And guess what? We get rejected right at the key level we mentioned yesterday. Go watch the video if you need to refresh your memory. Again, I cover this every single day so you guys know what to expect. Now, looking at this, I'm going to tell you where I went wrong today. If we're looking at this from a 5-minute day trading perspective, I'm going to be very transparently clear. So we entered into this range up here. I got a short position right here when you broke below the 90 EMA, and then you came back above it, got stopped out for like 10%. I got in again up here. You got rejected. You came back below 90 EMA. I got caught again. So I just stopped trading. I was like, screw this. I'm just not going to trade this. You keep buyers are stepping in, sellers are not stepping in. So I just need to take a step back. I'll be back on Monday. However, let me talk to you about the trading plan here. Let's go to the 1-hour chart so we can get a better visual, but give you a few more candlesticks. So when you get in here, I want to talk about what I'm looking for Monday. If you come out on Monday, I keep saying tomorrow, but if you come out on Monday, what am I looking for? I am looking to see if you're going to hold below this range. If you come out below this range, I'm operating in a bearish manner. What do I mean? I'm going to be looking for us to get below the 90 MA on the 1 hour, and I'm going to be looking for us to possibly reject back off this range around 40.70 on ES futures, which is the SPY futures, and then start working our way back down to 40.30. Maybe even 40.20. And then if we continue to sell through here and buyers cannot show up, then obviously you're targeting back to those lows down here at 3,900. But I want to get ahead of ourselves. I want to just talk about what I am expecting. However, there's a bullish narrative to this because look where you're at. You are at a key level. You're sitting there right now. If you start to press forward through this, I need to start addressing where I see us going. And I see us going to 41.10 in a hurry. I see it just kicking into overdrive if you open up above this, possibly retesting and pushing back up. So Sunday night, I will be looking at futures heavily and watching how we're reacting. But the big thing you need to know, if you open up below 40.65, 40.7, 40.70, then you're bearish. If you open up above that 40.70 to 40.80, you are bullish and you're targeting 110. If you're bearish, you're targeting 40.30, roughly 40.20. That's my TA right there. Going into SPY, give you a better visual here as well. Going into about the 4-hour chart, I want to address what's happening here. So with the 4-hour chart, basically what I was showing and kind of pointing out for Discord members was this right here. If we go all the way back to May when this dip really started heating up, these are all your key levels. You're low here, you bounce back up here, get rejected, you bounce back up, get rejected, and then break through on the next day. Come back, hold here, you break down. Again, more turbulence here, more turbulence here. You can see this is a major inflection point for the S&P. Now going into this, you have a bit of a range. You started to break above it and then you came back down. This range has not been adjusted. It's still the same level from yesterday that I had posted. As we go into the 15-minute, as we get into SPY even more, you are holding this all day long. You stayed above the 90 MA on the 15-minute. You really held this trend. 5-minute, it was a lot more choppy, but you're still operating in a good manner. It's important to know here as well, although volume may not be fantastic or extraordinary or just going through the roof, the important thing to know with volume onto any upside is all that you need for the upside opportunity is more buyers than there are sellers. Therefore, you do not need crazy volume. So the interesting factor here was you didn't really get any downside, right? So for instance, right, you're just going straight up, a few candles to the downside, very minor, and then you start buying back up. But you really only had that one dip throughout the day, which was around 10:30. After that, it was pretty much upside until the end of the day, last 15 minutes. Now, if we go back to the inverse of this story to the downside, when we had that, we had a lot of downside, but then we would bounce and then we'd get back to a key level and sellers would step in and press you down even further. And then before I go any further, I want to give a special shout out to HankaTrade. This is who I am currently using when I'm trading futures in the after hours or anything like that. You already know where I do my Bitcoin trading, and now this is where I do my future trading using Bitcoin as well. You can trade the NAS and the SPX basically 24/5 using their platform. And when you're looking at account types to be using, the one I'm using is going to be the ECN Plus. I'll explain why, because I'm going to be doing a $1,000 challenge here on the channel, as well as most likely the new channel as well. So you can follow me along using the platform, learn how to use it as well if you're interested in using anything like this. And a key reason that I'm using HankaTrade specifically is because, one, they're going to use my base currency. Two, if I ever want to do something like Forex as well, when it pairs well with something the way that the economy is moving, I can also use them for that. But it's also going to be very minimal when it comes down to these commissions, which can rack up. They're also going to give you the capability to go to max leverage. Now, I'm never going up to 500, but I am leveraging my money specifically on futures. And when it comes to trading any type of Forex or anything like that, based on what I'm trading and how my style performs. And just so you know, they are also running a bonus, giving you a 100% deposit bonus on whatever you're using. You can always withdraw your initial deposit, but you need to look at the actual rules for depositing the 100% bonus when you are trading it, because there's certain rules that apply as well. But they have a lot of promotions going on, so I would definitely be checking them out right now, because this is how you can trade some of the futures that I'm talking about here in the video. You know, the story goes on and on. Here, we really didn't get the opportunity at any of these levels besides right here at 406, and no one stepped in. That's why it leads me to believe that since we have this contract rollover on futures, that this was just a slower volume type of day. That's why, in my opinion, it's just best to wait and see how you open up come Monday morning. That's what I'm going to be looking at here. Now, I want to go over some different fundamental point of views, and I actually want to show you the cheddar flow aspect of this as well. As you get into cheddar flow, I want to look at S&P, looking at SPY. You can definitely see a lot of volume towards the downside, but I want to mention as well, most of the downside was entered at before 10 a.m. Central. It's important to know a lot of downside was right near market open. QQQ, what's going on here? Again, a lot of downside. However, one of your biggest orders was entered right near the end of the day, few more near the end of the day. Very important to mention there. Going into VIX, we're going to talk about this here in a second as well, 0.02, so it looks pretty strong. SPX going in here. Sorry, let me back up. SPX right here. Kind of hit or miss, but some of your biggest orders were towards the upside. And then those came about midday, even into the day. So we have a little bit of, confusion going on here, but I want to address some of the things happening. As we look at J&K junk bonds, what happened on the day? This was the biggest highlight for me personally. So J&K basically gives us an aspect of the risk on versus risk off asset of the market. So if you don't know, basically there's a risk on where people want to place more risk in the market, bet on tech, bet on riskier assets for upside because everyone's permeables. And then there's risk off to where you come to this point where, inflation's real. There's big issues in the economy and people don't want to have risk on assets because they believe there's a lot of risk aspects overall. And so J&K basically gives you a very good visual of this. So I want to show you the 15-minute here. Over the past few days, since you kind of quote-unquote bottomed out, you've been having a lot of upside here on J&K. You gapped up, you came down, but you continued back up. Something interesting happened here, though. On the past 2 days, you've had continuous upside even throughout the day with the S&P. But today, J&K was different. And today was arguably one of your quote-unquote most bullish days that you've had. Look at this. You gap up very strong, and then you start to push down for the remainder of the day, actually closing below the daily open and those morning lows that you had. This leads me to a major question and a major statement of, Did this coincide with today just being a lower volume because futures were rolling over? Again, it's important to know though, you are on top of this key level that we have been watching for some time that goes all the way back towards May and June that you mounted above. So that's important to know. I want to address that as well while we're here, that you are above that key area. Going into VIX. VIX, you had a lot of downside here. Now, I will address, despite the movement on the day, look at this downside you had on VIX. Okay, so let's see. So you have this downside from 23.5 to around 22.7. However, yesterday, again, I want to just compare yesterday to today and the day before that. Look at how much VIX was dropping back here. On, I believe this was Wednesday. You dropped from 27 down to lows of 24.5, $2.50 drop. Next day, highs, $26 down to lows of 23.5, another $2.5 drop. Boom, boom. This makes sense with a bullish market with things going up. This makes sense, VIX dropping. Now, this is where things get interesting for me, is that VIX starts to slow down here. You go from 23.5 market open to straight down and basically holding 22.8. Less than $1 of downside here on VIX. As we go back to SPY, we need to, we have to recognize what's happening. You gapped up from yesterday 400 and went to about 407 on the day. But the movement wasn't really that great throughout the day. Basically 403 to highs of 407.5 and then kind of trending back down. Not that great. A lot of slow movement in my opinion. So going into this, it leaves me with a lot of questions into next week. Okay, that's my first statement here. And I want people to be aware of that. But also, I want to say that you need to just remain calm in these types of markets right now. For me personally, I see the possibility of getting the bounce and continuing this. Yes, possible. But you need to watch out specifically on futures because in my opinion, this is the range you got to watch on ES and kind of on everything. Is can you hold above this level and can you break it? Even with NQ, you are below that level. You cannot quite get there. So these are the key areas and you are now approaching them and you're slowing down while you are approaching them. That tells me that there is a possibility, and in my opinion, the risk to reward opportunity is to trade back towards the downside if you do not get the breakthrough that you're looking for. It's also important to know if we talk about what happened with Fed Waller. As we get into what Fed Waller was saying, if you don't know, a lot of Fed members were speaking today, yesterday, the day before, and they're talking about raising rates significantly. And why would they be talking about raising rates more if quote unquote inflation is slowing down and being helped? It's because inflation is not being slowed down or helped. Because the only thing that's dropping right now are gas prices. Everything else is sky high. Nothing else is being affected except gas prices because of the manipulation of the way we are affecting that with our US economy. Okay, so Fed Waller, if you go in and you can dissect this, you can go look about his whole speech. However, what I'm going to tell you right now is the biggest thing that he said is that they expect rates to stay above 4% for a majority of 2023, which is very bearish. Number two, he said if labor continues to stay strong, the labor market, then that does support and strengthen the possibility of getting a higher rate hike going forward. Yes, higher rate hikes. Yes, and continuation here. So this is the major concern here. So, and you can come back. Waller said that if inflation does not abate through the rest of the year, so if inflation does not start going down throughout the rest of the year, the Fed may have to take the rate well above 4%. He further suggested the Fed get away from its practice of providing forward guidance on what its future path would be, and the factors that would come into play will dictate those moves. I believe forward guidance is becoming less useful at this stage of the tightening cycle. So they're saying we need to tell you less, and we just need to play it by ear, wait till the meetings, and just swing from the hip. Yes, that is what they are telling you. Okay, now they go over inflation numbers, things happening there, but that's what's happening when it comes to the Fed and their stance on the economy. And even with all these bad statements, what happens? You go up. Now, that's just my overall consensus on what's happening and how I see us moving. You're having terrible news. Inflation's still growing rapid. We can go look at the yields, look at the 10-year versus the 30. Once again, what's happening here? You actually rose today. Spoiler alert, you are rising on your yield inversion. This is cause to be concerned. Look at your US 2-year yield. This is one of the riskiest assets out there. And it's going straight parabolic. I mean, you're not slowing down for anyone, people. Inflation's going nowhere, okay? Yields tell you the story. As we look at the dollar value, again, you had a little bit of a dip, but guess what? You started bouncing back. Yes, spoiler alert. The dollar bounced back all day long, consolidating. It looks like it's getting ready to bounce and pounce back towards the upside. This all has me concerned with the broad scale of the market. Now, before I let you out, I also want to go over Bookmap, showing you the volume on the day. This was the other futures that they just rolled into. However, I'm still looking at previous futures because those are the ones that are getting the majority of the volume. Okay, as you're looking at this, this is your CVD, people. Look, let's actually get rid of, I don't even want to look at the level 2 data or the dark pool data. Don't even look at it. There's minimal volume there, not interested. Everything was pretty visible today. This represents your CVD. If you are not familiar with CVD, cumulative volume delta, it's a very good way to watch the actual flow of volume, buyers versus sellers. Okay, it's like buyers versus sellers for dummies. Now, you're saying to yourself, well, Tyler, how is it red and you're going up? Yes, good question. If you look at this, again, I always say you do not need to have crazy volume to go up. This is a good indication and a good visual how you can see there may be more sell orders on the market, a number of quantity, but the actual number or the size of the buy orders are outweighing the downside. Okay, so there's a lot of sellers out. However, there's a few buyers and they are propping us up and pushing us up continually. But the thing I want to point out here is on our really green days, i.e. yesterday, this was green all day long. As we're getting closer to quote unquote what I believe may be a short-term top or a top in general to our new low, it's hard to say, but look in here, look at how the indecision's forming. That leads me to believe, especially with the end of the day sell-off, that we again are starting to find a top here. Now, again, with me personally, it was hard to look at this because, again, those futures got messed up. If you look at futures regularly, it's like you're popping through some of these levels, right? We can go to ES and we can look. Looks like you're above that key level we mentioned. But again, if we subtract that gap, because there was no gap, you can even go check SPY contracts. In the after hours, they were not even moving based on a gap or based on that upside. If you go back to how futures really look, it's hard to see, but go look at your broker. TOS is a great example. ES futures, you are sitting there and getting rejected. So going into Monday, I'm anticipating slowdown. I'm anticipating some blood. That's what I want to see personally. But again, for confirmation, what do you want to see? You open above 4070, 4075, you're bullish. You open it below 4070 to 465, you are bearish, and we're looking for downside to 4030, possibly even lower depending on how we react to that level. That's what I'm looking at, and that's all I got. I'll see you next time.